Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. It was a week of presidents, economics and corporate takeovers, with, unfortunately, a hefty dose of COVID-19. It was a strong week for global financial markets, hopes of a Brexit deal and a $900 billion stimulus package from the US government pushed overseas markets higher, while stronger economic figures aided the ASX. The Dow Jones Industrial Average, the S&P 500 and Nasdaq all hit new highs during the week. European markets finished better, albeit traded in a narrow range, and the local market ended strongly, with Afterpay the standout performer. The decision to include the Buy Now, Pay Later group in the ASX 20 and ASX 50 sent its share price on a tear to new record levels. It's up 300% over the past year, easily the best of the top 200. The other large company to do well this week was Wesfarmers. The share price of the former West Australian Farmers Co-op hit a record high on the back of its retailing and agricultural businesses. The Aussie dollar kept surging, moving well beyond 76 US cents. Strong economic data, iron ore exports, and a weak US dollar was behind the appreciation. In global news, Brexit negotiations continued between Britain and the European Union. Who knows what will happen? There's been so many missed deadlines. It's a bit like the negotiations that cried wolf. Britain will leave the European Union on 31 December. That's for certain. But what that means for fishing and agricultural rights, the border with Northern Ireland, trade, and a host of other issues remains uncertain. Joe Biden officially became the next president of the United States after the Electoral College votes were tallied. Russia's President Vladimir Putin finally congratulated Mr. Biden, and Republican Senate leader Mitch McConnell finally conceded that the Democrat would be the next president. That prompted Donald Trump to immediately tweet that Mr. McConnell should not give up the fight to overturn the election. If Mr. Trump wasn't president, it would be hilarious, but he is president and will be for another month. Climate change got a run this week. China and Europe pledged greater commitments to address carbon emissions, leaving Australia increasingly on its own. By the end of the week, it looked likely that Prime Minister Scott Morrison will commit Australia to zero carbon emissions by 2050, but he's not there yet. The COVID-19 vaccine from Pfizer and BioNTech began being rolled out in Britain, the United States and Canada. Moderna's vaccine got the okay from the Federal Drug Administration in the US. But the CSL University of Queensland Phase 3 trials here in Australia were abandoned. A new report from the federal government's Centre for Population showed that Australians were having fewer babies and are getting older. Migration will be negative this financial year, and our population won't grow as fast as it would have if COVID had never happened. There are big implications from all this, the most important one being slower long-term economic growth for Australia. More people, more demand, more growth. Long after the health implications of COVID-19 have ended, the economic impact will be lingering. It was a big week for Australia-China relations. Well, I'm not sure that we can call them relations, really. Australian coal exports have been banned, according to media reports, though Beijing denied there was any dictum. In any case, ships full of coal can't unload in China. The list of banned goods is getting longer. Coal, barley, timber, cotton, beef, lobster even. And wine has had prohibitive tariffs imposed. Iron ore hasn't been touched, yet. By the middle of the week, Australia had decided to take China to the World Trade Organization over barley. The spat continues, and Australian producers are the losers. Fortunately, iron ore prices are high in keeping export values strong, but that doesn't help the local wine grower or the cotton producer. Incredibly, despite the COVID-19 pandemic, the median balanced superannuation fund will provide a positive return to members this year. The surge in equity markets shifted it from negative to positive territory during November. That's an incredible performance, given Australia went through its first recession in nearly 30 years during 2020. It was a week that showed union membership in Australia is on the slide. Only 14% of the workforce is unionised. It was 40% in 1990. Teachers and academics are the most unionised, followed by the public service. The local housing market keeps on keeping on. The number of auctions was supposed to fall in December, but they haven't, and clearance rates are strong across the country. The top end of the market seems to be in rude health. In fact, the Housing Industry Association said for the 3 months to the end of November, sales of homes were 40% above 2019. In corporate news, it's banks' annual general meeting season. Westpac said it would restore dividends to shareholders next year and conceded it hadn't done enough to manage non-financial risk. ANZ said it would do more around climate change and lending for renewable energy projects. And National Australia Bank said it was operating in a much better economic environment, though COVID-19 will leave scarring. All the banks said the number of mortgage and business loans that had been deferred had dropped. There was further good news for shareholders when the Australian Prudential Regulation Authority lifted the cap it had imposed on bank dividend ratios. That means all the banks can pay out whatever dividends they want. That's great news for shareholders, many of whom are older Australians and rely on dividends to fund their retirements. IOOF got the okay from the Australian Competition and Consumer Commission to acquire MLC from National Australia Bank. The watchdog said the $1.4 billion deal wouldn't hinder competition. EFTPOS, BPay and NPP all agreed to merge to better compete with Visa and MasterCard. Commonwealth Bank, which bought Aussie Home Loans off John Simons for $660 million, will tip the group into a joint venture with Lendi. Commonwealth Bank will own 45% of the JV and receive $105 million for it. Not sure Aussie Home Loans turned out to be that great an investment. And neobank Zinja said it will shut up shop. It won't be the last of the neobanks to do so. Toll road group Transurban said it would sell 50% of a bunch of its toll roads in the Washington area to 2 Australian and 1 Canadian pension funds for almost $3 billion. And it wasn't such a good week for Retail Food Group. The ACCC has commenced proceedings alleging it engaged in unconscionable conduct when it sold or licensed 42 loss-making corporate stores to new franchisees in the 4 years to 2019. Biotech Mesoblast share price had a horror week, down 50%. After disappointing trials for its drugs. That doesn't happen regularly. Now I get to the point where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was the outbreak of COVID-19 community-transmitted cases in New South Wales. It's not clear where the virus came from and how much it spread. People who live or work in the Northern Beaches area of Sydney have been told to stay put. Australia had gone nearly 2 weeks without a case. People were feeling good again about Christmas, and the economy was picking up. Now, state borders are being closed. Long lines of people waiting to be tested have formed. Travel plans have been thrown. State Premier Gladys Berejiklian expects the numbers to rise. The sleeper story was about infrastructure. Sounds dull, I know, but it's the backbone of the economy. A new report from Infrastructure Australia went through the areas where more investment is needed. That includes waste recycling and broadband services. COVID trends such as online shopping, demand for telehealth services, and a shift to online education will last for years. The report didn't get much coverage, but in terms of setting out a policy and investment agenda, it's gold. The most remarkable story goes to the Australian economy. Not long ago, we were looking at an unemployment rate of around 12% by Christmas, negative growth, and little hope for the first half of 2021. That's all changed. Labour force figures showed 90,000 new jobs were created during November, most of which were full-time. The unemployment rate is 6.8%, about half of what was expected. About 85% of jobs lost during the coronavirus crisis have been regained. The economy is expanding faster than forecasts. Households are spending money. Iron ore is driving export income. Interest rates are low and government spending is high. Yes, there are negatives. The budget deficit will remain big, very big, for a long time. Relations between Beijing and Canberra are at their lowest point in decades, and people aren't working enough hours. There's also the coronavirus outbreak in New South Wales. But if back in March or April or May or June, the government was offered the current circumstances, they would have taken it in a heartbeat. My favourite story this week is about rock lobsters. They're on sale. China doesn't want them, so you can head down to your local Coles or Woolies and pick one up for about $20. Moving on to this week's interviews. On Monday, I spoke to HSBC Chief Economist Paul Bloxham about where the year ended in economic terms. Tuesday's guest was Adele Ferguson from the Sydney Morning Herald and The Age, one of the country's best investigative journalists. We spoke about corporate directors and the lack of diversity. The discussion went well beyond gender. Rob Newman from Nearmap was my guest on Wednesday. The group photographs and provides data on 600 cities across Australia, New Zealand and the United States. It was a fascinating discussion about how technology and photography is changing the world. On Thursday, I spoke to Damien Cooley from Cooley Auctions about the incredibly resilient housing market. And on Friday, I had a great chat to Hollywood talent manager Rob Masala. It was a bit of a discovery session for me, and it's well worth a listen if you like cinema, either big screen or little screen. If you missed any of my interviews, you can find extended versions of them in the Fear and Greed playlist. That's the week that was for Fear and Greed. I hope you enjoyed it. We're taking a break from our daily editions and afternoon reports over the holiday period. I'll be back tomorrow morning with a Sunday feature interview on the shift towards renewable energy. Then from next week, there'll be a new episode released each Monday and Thursday. Extended interviews with some of our favourite guests. This coming Monday, we start with my year in review. I'm Sean Aylmer. Have a great Saturday. I look forward to your company tomorrow.